Hello, Managerial. This is part 2 of my lectures on managerial accounting. This video will be beginning with PowerPoint 8 and I will go to the end. Again, when I'm showing you how to do the problems, I will have a separate video. Okay, so let me begin with PowerPoint slide 8. So this is an example of an income statement for a service company. This is basically accounting 1, where you just have your revenue, you subtract out your expenses. So a service company does not have inventory, and so it will also not have cost of goods sold. Next one is an example of a merchandising company. So a merchandising company is going to have cost of goods sold. However, a merchandising company, the cost of goods sold will be completed different than a manufacturing company. So a merchandising company is just going to have beginning inventory. You'll add in freight. So freight in, you will add in. If it was freight out, you would not. That will give you cost of goods available for sale. You'll subtract out your ending inventory, and that will give you cost of goods sold. I am going to have a separate video on this where I will show you how to do a practice problem from the homework. Next slide is an example of a merchandising income statement. So you have your revenue. Now, the prior slide showed you how you'll figure out cost of goods sold. And then you'll just input the rest of the figures, and that will give you your operating income. Again, the next few slides are examples of a manufacturing company. So manufacturing companies are going to be more difficult to figure out cost of goods sold. The reason being is that you have to figure out your direct materials, your direct labor, your manufacturing overhead. This first slide is showing you how to figure out direct materials used. Again, I will show you in a separate video how to do a practice problem like that. So right now, I'm just going to skip over that pretty quickly because I will have a separate separate video on that. Okay, so the next schedule that you will complete is called the cost of goods manufactured. This is the second part of the 3 steps. Sometimes some of the problems will be really easy. So they'll tell you direct materials are this, direct labor is this, manufacturing overhead. So it's nice and simple. All you'll have to do is input the numbers. Well, you'll have to start with your beginning work in process. Then you'll add in your direct materials used, direct labor, and you will get your total manufacturing cost. You'll subtract out your ending work in process, and that will give you cost of goods manufactured. Yes, I did go over this rather quickly. The reason being is that I'm going to have a separate video to show you how to do this. Let's look at the example of the next slide. This is going to help you determine what the cost of goods sold is. Well, you needed the prior 2 steps in order to calculate cost of goods sold. So now that you have cost of goods manufactured, you just input that number. So you have your beginning finished goods inventory. You'll add in your cost of goods manufactured. That will give you cost of goods available for sale. You'll subtract out your finished goods inventory, and that will give you cost of goods sold. So this is just introducing you to the different schedules. This is what the manufacturing income statement will finally look like, but you realize that you had to do additional steps in order to get to this cost of goods sold figure. Next slide is an example of a manufacturer's balance sheet. So manufacturer's balance sheet is going to be different than a merchandising. So a merchandising business is just going to have cash, receivables, and inventory. Whereas a manufacturing company is going to be broken out more for inventory. You'll be broken out with your raw materials, work in process, and finished goods. I will have separate slides explaining to you what these items are. So in this video, please be taking good notes on what each of these items are. So a manufacturing balance sheet, again, you're going to have raw materials, materials waiting to be processed, and those can be direct or indirect. Work in process. Okay, so what's that? Raw materials are just, I'm going back to that because I want to make sure you're clear. Raw materials are materials waiting to be processed. They can be direct or indirect. I want you to get used to the word requisition. So we're going to see that a lot when we work on these problems. When they say they requisition the raw materials, that means they're going to get those raw materials and they're going to start working on them. Well, the next area that you will see when they start working on them, they will make a journal entry to work in process. You don't have to worry about the journal entry yet. I just want you to get what these items are. So work in process are partially complete products. They're material to which some labor and or overhead have been added. So later on, I'm going to show you how we will add some of the overhead. You're going to learn predetermined overhead rates in a later chapter. But this category is work in process. So here's how it starts. Starts with raw materials. Next, it goes to work in process. Last item that it will go to is finished goods. So finished goods, it's not going to end up into this category until it's completed. So until that mountain bike is completed, it will not end up in finished goods. Once it is, it will end up in finished goods and it will sit there until it's sold. Next item I want you to understand. So you're going to need to understand this when you do the homework this week. Period costs. So I will not have a separate video on one of your homework problems where it makes you isolate period costs or product costs. So take good notes and understand this right now. Period costs are expenses not attached to the product. What are examples? Anything to do with selling, advertising, any commissions for saleswomen or men salaries, those will be expensed immediately. Okay? So any selling costs to obtain orders, those will be expensed immediately. Other examples, administrative costs, anything related to the office. Now look at the wording, not the plant, not the factory. Anything related to the office will be period costs. You're going to learn anything related to the factory will be product costs. So what are examples? Any CEO salaries, any secretary salaries, any administrative functions will be, those costs will be expensed immediately. Sometimes they'll say depreciation of administrative equipment. That will be a period cost and expensed immediately. When it's expensed immediately, it appears on the income statement, boom, right away. All right, now take good notes. We're going to go over product costs. You have to understand direct materials, direct labor, and manufacturing overhead costs. Those will be your product costs. Those are all included in inventory on the balance sheet until sold. So they will not appear on the income statement until they are sold. Okay, let's go over direct materials first. Direct materials are the costs of raw materials or parts that go directly into making the product. Examples would be steel used in the frame of making a mountain bike. Another direct material, the seats. Another direct material, the tires. Okay, so here's how I always tell. Direct materials, are they expensive to the product? So you will learn they'll put on the chain. Well, the chain will be a direct material, but when they put on the oil, so they lubricate that chain, that will go in manufacturing overhead, okay? Because that's not expensive, okay? So you're trying to think, you have to isolate what direct materials are. Next category is direct labor. Direct labor costs are the wages and fringe benefits that are paid to employees who are directly involved in manufacturing and producing the good. So the assembly line workers will be direct labor. Okay? Sometimes this gets confusing when you read the word machine. So if they have a machine that is directly putting that frame on the bike, that will be direct labor. But if you have the machine that is just maybe putting oil on the chains or something like that, that will be manufacturing overhead. So it's easier for me when I think of a person. So I think of that actually assembly line worker putting the seat on the bike or putting the frame together onto the bike. That is direct labor. Here's how I tell. Are they actually touching the product? So they're actually putting that product together. Okay, that will be direct labor. If it's not direct labor or direct material, it's going to go in manufacturing overhead. Manufacturing overhead costs include any costs that are incurred with making the product, but they're not direct materials or direct labor. So examples would be the maintenance worker cleaning up in the plant that puts together that mountain bike. Examples would be the oil put on the chain of that mountain bike. Any cleaning supplies for the factory. So here's how I tell. Manufacturing overhead. Is it related to the factory, the plant where they're putting this product together? Then that's going to be manufacturing overhead. If it's not, like I gave you the example of administration, if it's in the administration building, that will be a period cost. Okay, so make sure you understand the distinction between the three. Last category we're going to look at are prime costs. So prime costs or manufacturing costs are often combined as follows. Prime costs are direct material plus direct labor equals prime costs. Okay, so we'll do a different practice problem on what prime costs are. Conversion costs are direct labor plus manufacturing overhead will be your conversion costs. Okay, so please take good notes. And then again, I'm going to have different videos where we will be practicing these problems out. Okay, talk to you soon.